What's up, Bitcoin believers? This is Anna, and you're tuned in to the Bitcoin Street Journal podcast, the only crypto podcast that matters because, let's be honest, there's only one cryptocurrency that matters. And folks, today is not just any day. Today is Halloween, but more importantly, way more importantly, today marks 17 years since Satoshi Nakamoto dropped the most revolutionary 9-page document in financial history on an unsuspecting world. That's right, people. It's Bitcoin White Paper Day 2025, and I am absolutely buzzing with orange-pilled energy right now. We're gonna celebrate this anniversary in style, talking institutional adoption that would make 2020 Bitcoiners cry tears of joy, regulatory victories that seemed impossible just 2 years ago, and of course, we'll roast some altcoins because, well, it's what we do. Coming up in today's episode, BlackRock's $100 billion Bitcoin ETF flex, Trump's strategic Bitcoin reserve. Yes, you heard that right. The US government is hodling. Why October 31st is literally the perfect day for Bitcoin to be born. And why every single altcoin is still just a distraction from the hardest money humanity has ever known. But first, before we dive into this birthday celebration, head over to the BitcoinStreetJournal.com and set up your free Nostr profile. Because if you're not on Nostr, you're still letting Jack Dorsey's forward company control your speech. Get censorship resistant, get sovereign, get on Nostr. All right, let's get into it. Market update segment. Okay, let's talk numbers because Bitcoin doesn't care about your feelings. It just keeps producing blocks every 10 minutes like absolute clockwork. As I'm recording this on Halloween 2025, Bitcoin is trading at $107,529. That's $107,529 per Bitcoin. Now, I know what you're thinking. Anna, that's down from the $126,000 all-time high we saw earlier this month. And you're absolutely right. We had a spicy 13% correction mid-October that liquidated 19 billion with a B, in over-leveraged positions. But here's what matters. Bitcoin is still up 1.14% for October, maintaining that Uptober tradition. And historically, folks, October has been green for Bitcoin 10 out of the last 12 years, with average returns of 27%. October is Bitcoin's power month, and we're closing it out with a W. Current market cap? $2.1 trillion. That's not a typo, trillion. Bitcoin is literally worth more than most countries' GDP. Bitcoin dominance is sitting pretty at around 57.4%, which has actually come down a bit as some casino chips, altcoins, have been pumping. But don't worry, we'll get to those pretenders in a minute. The 24-hour trading volume is absolutely crushing it. And here's the thing that gets me fired up. Despite Federal Reserve Chair Jerome Powell basically telling us that interest rate cuts are done for 2025, despite Trump threatening 100% tariffs on China, despite every headline trying to spread FUD, Bitcoin is still over 100K. Do you understand what that means? The macro headwinds that would have cradled Bitcoin back in 2017 or 2020 are now just minor turbulence. Bitcoin has matured, the honey badger has evolved, and it doesn't care about your central bank policies anymore. And speaking of not caring, let me give you altcoiners the courtesy update. Ethereum is down. Solana is doing whatever Solana does, and the other 20,000 shitcoins are still pretending they have a purpose. They don't. Moving on. Main segment 1, 17 years of Bitcoin, the Halloween revolution. All right, let's get into the main event. 17 years ago today, October 31st, 2008. At exactly 2:10 p.m. GMT, someone using the pseudonym Satoshi Nakamoto posted a 9-page PDF to an obscure cryptography mailing list called Metzdao. The title? Bitcoin, a peer-to-peer electronic cash system. And the world has never been the same. Now here's what blows my mind about the timing. This white paper dropped just 2 weeks after the US government announced a $700 billion bank bailout package. The traditional financial system was literally collapsing under the weight of its own corruption and stupidity. And Satoshi was like, hey, I've got a better idea. What if we had money that nobody can print, nobody can censor, and nobody can control? Genius. Absolute genius. And can we talk about the Halloween timing for a second? Because this is either the most epic coincidence in history, or Satoshi was playing 4D chess with symbolism. October 31st, Halloween, has historically been a day of reformation. Martin Luther nailed his 95 Theses to a church door on Halloween in 1517, sparking the Protestant Reformation that changed Europe forever. And in 2008, Satoshi Nakamoto published the Bitcoin white paper on Halloween, sparking the monetary reformation that's changing the world. Some people think Satoshi chose this date because it's right before US election day. And guess what? Bitcoin's 4-year halving cycle perfectly aligns with presidential elections. Could be intentional, could be cosmic alignment. Either way, it's absolutely perfect. And think about what Bitcoin has achieved in just 17 years. Never been hacked at the protocol level. Never. 99.99% uptime. It's more reliable than your bank's website. Processed hundreds of millions of transactions. Secured trillions of dollars in value. Operated 24/7, 365, without a CEO, without a headquarters, without asking anyone for permission. Meanwhile, how many altcoins from 2008 are still around? 0. How many from 2015? Maybe 3 that anyone cares about. And 2 of those are centralized garbage. Bitcoin is the only cryptocurrency that has stood the test of time, and it's because Bitcoin is the only cryptocurrency that's actually decentralized, actually scarce, and actually secure. 21 million Bitcoin, that's it. No founder can mint more, no foundation can vote to increase supply, no venture capitalists can dump on you after they unlock their tokens. 21 million, forever. Hard money. And get this, Satoshi's original wallet, which has never been touched since 2010, contains an estimated 1.1 million Bitcoin. At July's peak of $123,000 per Bitcoin, that's $135 billion. Satoshi Nakamoto is potentially one of the world's wealthiest people, and we don't even know who they are. That is the ultimate proof of work. Build the most important financial protocol in human history, become a billionaire, and walk away. No book tours, no conference speeches, no Satoshi coin, ICO. Just pure, beautiful, anonymous genius. Compare that to every single altcoin founder who won't shut up on Twitter, who does interviews every week, who needs to be the face of their blockchain. Pathetic. They're all wannabe Steve Jobs when Satoshi was more like the Banksy of money. Anonymous, revolutionary, and impossible to stop. Main segment 2, institutional invasion, the BlackRock tsunami. Okay, now let's talk about what's been happening in 2025. Because honestly, if you had told me 5 years ago that we'd be where we are today, I would have said you were smoking hopium. But here we are, and the institutions are here. BlackRock's iShares Bitcoin Trust, ticker IBIT, has accumulated nearly $100 billion in assets under management. Let me say that again. BlackRock, the world's largest asset manager, has $98 billion in a single Bitcoin ETF. This is the most successful ETF launch in history, and it's not even 2 years old. Total Bitcoin ETF inflows in 2025, $6.96 billion. Record daily inflows hit $1.38 billion right after Trump won the election. The suits on Wall Street are falling over themselves to get Bitcoin exposure. But wait, there's more. Exchange-traded products now hold over $175 billion in on-chain crypto holdings, up 169% from just a year ago. And combined with digital asset treasury companies like MicroStrategy, institutions now hold approximately 10% of Bitcoin's entire supply. Let that sink in. 10% of all Bitcoin that will ever exist is now in institutional hands. And they're not day trading it, folks. They're hodling, because they finally figured out what we've been screaming from the rooftops for years. Bitcoin is the hardest money ever created. And the corporate treasuries, oh my God. The corporate treasuries, MicroStrategy, our lord and savior of corporate Bitcoin strategy, continues to stack sats like it's their job, because it is their job. Oracle has allocated 5% of its treasury to Bitcoin. That's one of the world's largest software companies saying, yeah, we'd rather hold Bitcoin than dollars. Brutal for the dollar, amazing for Bitcoin. Ford Motor Company, Ford, became the first major automotive manufacturer to add Bitcoin to its balance sheet. We're talking about a company founded in 1903 that helped build America's industrial might, and they're buying Bitcoin. Prudential Financial dropped $1.2 billion into Bitcoin as a long-term reserve strategy. Insurance companies, the most conservative money managers on earth, are buying Bitcoin. Do you understand what this means? The smartest money managers, the biggest institutions, the most risk-averse financial advisors, they're all coming to the same conclusion. Bitcoin is inevitable. And here's the kicker. Analyst estimates suggest that a modest 2 to 3% crypto allocation across institutional investment pools could generate $3 to $4 trillion in Bitcoin demand. Bitcoin's total market cap right now is $2.1 trillion. So we're talking about potential demand that's twice the current market cap. Supply and demand, baby. Economics 101. And Bitcoin's supply is capped at 21 million. The supply squeeze is real, it's happening, and it's beautiful. Over the next 6 years, miners will produce about 700,000 new Bitcoin, worth maybe $77 billion at current prices. Meanwhile, institutional demand could hit $3 trillion in the same period. That's a 40-to-1 supply-demand imbalance. 40-to-1. This isn't speculation. This is math. This is the most predictable supply shock in financial history, and it's unfolding in slow motion right in front of us. But sure, go ahead and buy some centralized proof-of-stake coin that prints new tokens every day and hope it works out. I'll be over here with my Bitcoin, which has a supply schedule written in code that nobody can change. Main segment 3, the Trump effect, regulatory revolution. Now, I gotta talk about something that nobody, and I mean nobody, predicted would happen this fast. Complete regulatory clarity in the United States. After years of Gary Gensler and the SEC playing whack-a-mole with crypto companies, after Operation Chokepoint 2.0 trying to debank Bitcoin businesses, after watching entrepreneurs flee to Singapore and Dubai, the Trump administration came in and flipped the script. On January 23, 2025, President Trump signed an executive order that basically said, we support the responsible growth of digital assets. Not we tolerate them. Not we'll regulate them to death. Support. He created a president's working group on digital asset markets and appointed David Sachs as the crypto and AI czar. That's an actual government position now. We have a Bitcoin czar. But here's where it gets really good. On March 6, 2025, Trump signed an executive order establishing a strategic Bitcoin reserve. The United States government has a Bitcoin reserve, not a dollar reserve backed by Bitcoin, a Bitcoin reserve. The US government holds over 207,000 Bitcoin, worth approximately $17 billion that was seized through law enforcement. And instead of selling it like they used to, they're hodling it as a strategic asset, just like gold or oil. The executive order literally says, Bitcoin is the original cryptocurrency. And now we've got to talk about something very important. The Bitcoin protocol permanently caps the total supply of Bitcoin at 21 million coins and has never been hacked. As a result of its scarcity and security, Bitcoin is often referred to as digital gold. The US government is calling Bitcoin digital gold in official documents. We won. We actually won. The Bitcoin maximalists were right, and now the government is admitting it. And it keeps getting better. In July, Trump signed the Genius Act into law, creating the first federal regulatory framework for stablecoins, requiring 100% reserve backing with liquid assets. This is huge for Bitcoin because it legitimizes the entire crypto infrastructure without compromising on principles. The SEC under Trump has done a complete 180. They created a crypto task force, not an enforcement division, a task force, focused on fostering innovation and protecting investors. They rescinded Staff Accounting Bulletin 121, which was basically forcing banks to treat customer Bitcoin like a liability on their balance sheets. That rule was killing institutional adoption, and it's gone. Paul Atkins, a crypto-friendly former SEC commissioner, is the new chair. The days of regulation by enforcement are over. Now, I know some hardcore Bitcoin maxis are like, Anna, why are you celebrating government involvement? Bitcoin was supposed to be separate from government. And look, I hear you. Bitcoin doesn't need government approval to work. It's been working perfectly for 17 years without asking permission. But here's the thing. Regulatory clarity removes barriers to adoption. It means your uncle can buy Bitcoin in his 401k. It means pension funds can allocate without worrying about their fiduciary duty. It means banks can custody Bitcoin without regulatory uncertainty. Bitcoin's protocol doesn't change whether governments love it or hate it. But human behavior does change when the government stops actively fighting Bitcoin. And let's be real, the fact that the US government went from Bitcoin is for criminals to Bitcoin is a strategic reserve asset in less than 10 years is the most bullish validation imaginable. Satoshi built Bitcoin to be unstoppable, and it turns out when you can't stop something, the smart move is to join it. The honey badger doesn't care if you like it, but it's pretty hilarious when you finally admit defeat and start feeding it. Main segment 4. Mining, halvings, and hash rate dominance. All right, let's get technical for a minute, because the April 2024 Bitcoin halving is still reshaping the entire mining landscape, and it's absolutely fascinating. For those who are new to Bitcoin, welcome. You're early even at 107K. The halving is a pre-programmed event that happens every 210,000 blocks, roughly every 4 years, where the reward miners get for mining a block gets cut in half. In April 2024, the reward went from 6.25 Bitcoin per block down to 3.125 Bitcoin. That means the daily supply of new Bitcoin dropped from about 900 Bitcoin per day to 450. You think this would crush miners, right? Cut their revenue in half? Some people predicted mining apocalypse, hash rate collapse, network security crisis. And you know what happened? The hash rate hit all-time highs. As of May 2025, Bitcoin's network hash rate reached 831 exahashes per second. That's 831 quintillion hashes per second. The network has never been more secure. What happened is exactly what Satoshi designed. Inefficient miners got squeezed out, and the most efficient, well-capitalized miners took their market share. It's beautiful free market economics playing out in real time. Hash price, that's the daily revenue per terahash, dropped from 12 cents in April 2024 to about 5 cents by April 2025. Network difficulty hit an all-time high of 123 terahashes. Mining Bitcoin is harder and less immediately profitable than ever. And yet, miners are upgrading their equipment, expanding into regions with cheap electricity, and investing in the future. In Oman, miners are getting electricity at 5 to 7 cents per kilowatt hour. In the UAE, some semi-governmental projects are getting power at 3.5 to 4.5 cents. This is driving innovation in energy. Bitcoin mining is incentivizing renewable energy projects, monetizing stranded natural gas, and making previously uneconomical energy sources profitable. Bitcoin is literally helping solve energy problems while securing the most robust monetary network in human history. Try getting your proof-of-stake shitcoin to do that. And here's the thing about the halving. It's a forcing function for efficiency. Every 4 years, only the strongest miners survive. That's not a bug, that's a feature. Compare that to Ethereum, which just decided to change from proof of work to proof of stake because miners were using too much energy. They changed the rules mid-game. That's not decentralized, that's a corporate board meeting. Bitcoin's rules were set by Satoshi in 2008, and they will not change. The halving schedule is immutable. The 21 million cap is immutable. That's what makes Bitcoin hard money. The next halving is in 2028, just as institutional FOMO is reaching peak intensity. Imagine, pension funds finally getting approval to allocate, corporations rushing to beat each other to Bitcoin, retail FOMO from six-figure prices, and boom, the supply of new Bitcoin gets cut in half again. It's like watching a slow-motion supply shock. We know it's coming. We know exactly when it's coming. And it's going to be glorious. Segment 5, Altcoin Roast, the shitcoin circus. Okay, it's everyone's favorite segment. Time to roast the altcoins. Because while Bitcoin is out here building a $2 trillion market cap and getting nation-state adoption, the altcoin casinos are, well, they're doing altcoin things. Let's start with Ethereum. Ah yes, the world computer that costs $50 to send a transaction when there's any actual usage. ETH is down again, while Bitcoin is holding strong. Shocking. And don't even get me started on their roadmap. Every year, its next year will scale. Meanwhile, Bitcoin's Lightning Network is processing millions of transactions for fractions of a penny. But sure, keep waiting for sharding or whatever buzzword they're using this quarter. Oh, and remember when Ethereum was proof of work and people mined it with GPUs? Yeah, they just changed that. They went to proof of stake, which is basically whoever holds the most coins controls the network. That's not decentralization, that's plutocracy with extra steps. Vitalik and his buddies can literally decide to change Ethereum's monetary policy whenever they want. They've already done it multiple times. Ultrasound money, they call it. You know what I call it? Centralized garbage. Bitcoin's monetary policy has been the same since 2008. 21 million. No founders, no foundation, no changing the rules. That's hard money. Solana. Oh, Solana. The blockchain that shuts down more often than a government office during a snowstorm. Fast and cheap transactions, they said. Yeah, until the network crashes again and you can't trade anything. But hey, at least the venture capitalists who got in at a penny per token made their money before dumping on retail. That's the real innovation in Solana. Innovative ways to separate fools from their money. XRP, still fighting the SEC. Oh wait, now they're not. But they were, but maybe they weren't. Nobody knows. It's centralized banker coin trying to cosplay as a cryptocurrency. Ripple Labs holds billions of XRP that they can dump on the market whenever they want. Their entire value proposition is banks might use this. You know what banks are actually using? Bitcoin. The US government has a strategic Bitcoin reserve, not a strategic XRP reserve. Cardano, still coming soon after how many years? Peer-reviewed, they say. You know what else is peer-reviewed? Bitcoin, by the entire world, for 17 years, and it works perfectly. And don't even get me started on the thousands of other tokens. Every week there's a new Ethereum killer. Newsflash, Ethereum doesn't need a killer. It's committing suicide by complexity. Meme coins, dog coins, cat coins, food coins, scam coins, they're all the same. Temporary casinos that make founders rich and leave retail holding bags. Here's the thing altcoiners don't understand. Bitcoin already solved the problem. We have decentralized, censorship-resistant, provably scarce money. That was the hard part. That's what Satoshi spent years developing. Everything else, smart contracts, DeFi, Web3, those are all solutions looking for problems. And even when they do solve a real problem, they do it on centralized networks that can be shut down, censored, or changed by founders. Bitcoin is the only cryptocurrency that's actually cryptocurrency. Everything else is just a company with a token trying to avoid securities laws. You want programmable money? Build on Bitcoin, Lightning Network, RGB, Taproot, all the functionality, none of the centralization. There's Bitcoin and then there's everything else. And everything else is just noise designed to distract you from accumulating the hardest, soundest, most decentralized money in human history. But hey, if you want to gamble on which centralized database coin is going to pump next, be my guest. I'll be over here with my Bitcoin. Watching the price go up while the protocol keeps producing blocks every 10 minutes, like it has for 17 years. Closing segment, the road ahead. All right, Bitcoiners, we've covered a lot in this White Paper Day special. Let's bring it home. 17 years ago, Satoshi Nakamoto gave the world a gift on Halloween, the gift of freedom. The freedom to transact without permission, to save without inflation, to build wealth without trusting corrupt institutions. And what has Bitcoin done with those 17 years? It's become inevitable. BlackRock is hodling $100 billion. The US government is hodling 207,000 Bitcoin. Oracle, Ford, Prudential, they're all hodling. Pension funds are preparing to allocate. 401ks are adding Bitcoin options. The supply squeeze is real. Demand is exponential. Supply is algorithmically constrained. We're watching the most predictable supply shock in financial history. Quick price check before we go. Bitcoin is at $107,529 as I'm recording this. October closed green like it almost always does. Q4 is historically Bitcoin's best quarter. We hit $126,000 earlier this month, and analysts are projecting $130,000 to $135,000 by end of year. But here's what I want you to remember. The price doesn't matter if you don't control your keys. Say it with me. Not your keys. Not your Bitcoin. Get your Bitcoin off exchanges. Get a hardware wallet. Learn to self-custody. Because at the end of the day, Bitcoin is about sovereignty. It's about being your own bank. Satoshi didn't build this so you could trust Coinbase or Binance with your wealth. Satoshi built this so you could be sovereign. So here's your homework. 1. Go to the BitcoinStreetJournal.com and set up your Nostr profile, censorship-resistant social media. If you learned something today, zap me some sats on Lightning. Support creators who are orange-pilling the world. 3. Subscribe to this podcast wherever you're listening. 4. Share this episode with someone who needs to understand why Bitcoin is inevitable. And most importantly, keep stacking sats. Dollar cost average, HODL. And remember, there will only ever be 21 million Bitcoin. The earlier you start accumulating, the better your position in the hardest money ever created. It's been 17 years of Bitcoin, and we're just getting started. The next halving is in 2028. The next bull run is being built right now. The institutional adoption wave hasn't even peaked yet. Bitcoin is inevitable. The revolution that started on Halloween 2008 is unstoppable. This is Anna signing off from the Bitcoin Street Journal podcast. Stay sovereign, stay humble, and stack sats. See you on the next block.